Good evening and welcome to Jesse Day Trades 3. Tonight is going to be a video obviously showing the trading view chart of Tesla. And today is happens to be 26 March 2026, and we made 0.38% trading inverse leveraged ETF of Tesla called TSDD. And this trading view chart is just of normal Tesla, but you can use a Tesla chart to trade Tesla ETFs because the ETFs are basically derived from Tesla's price movement, essentially. And I should also say I'm very new to this trading stuff, and there's still so much to learn, and I'm learning right along with you guys. So obviously take what I say with a grain of salt, and I'm not by any means a professional. So this is not trading any kind of professional trading advice or anything. It's just me basically documenting and journaling my wife and I's trading journey. So before we begin diving into this chart, I want to preface this discussion by saying this chart, especially if you haven't looked at TradingView much before or at all, this is going to look very confusing and be very overwhelming. I'm not going to, in this video, necessarily explain a lot about how to set up the chart to make it look like this. In subsequent videos I will in the future, but tonight I'm just going to be kind of doing a general overview of today's price action and how we were able to capitalize on it. And then in future videos I'll go more in depth on how to set up the charts like I do, and so on and so forth. But for now, I'll just start explaining what I have here so far. So right now, I'm on the 1 minute candle view, as you can see up here. This one indicates that we're on the 1 minute time frame, and up here I have a few different time frames that I like to have up on my quick reference list. Anyways, we have this blue dashed vertical line here, which indicates the market open, and I'm in Central Time, so market open for me is 08:30 in the morning. So like I said, today is 26 March, so it's a Thursday, and so what I like to do is I like to have the market open marked here, and then I'll explain what I'm about to talk to you all about a little bit more in another video. But essentially, lately I've been trading a strategy based off of areas of liquidity, and essentially making it very simple right now. These horizontal green lines are areas of liquidity, and these horizontal red lines are also areas of liquidity. I color code my lines that I draw on the chart, and lately I have been drawing these lines of liquidity prior to the trading session, so basically the night before, and then I'll use those for that following day's trading session to kind of be indicator lines of where I might be able to enter trades. So I color coded them, like I said. So if the price dips below a green line and then back up, that's possibly a good time to buy or go long. And then the opposite's true with the red. If it goes above red and then comes back down, it could possibly be a good time to short, or in this case, since we're trading with Robinhood, we're using an inverse leveraged ETF of Tesla, which is essentially the same thing as shorting Tesla. So if it goes above and then below one of these red lines, that could be a good time to short Tesla. So today, that's just what we did. We shorted Tesla, essentially, and down on this bottom scale, I'm gonna zoom in a little bit. I have two vertical yellow lines. So the left one indicates what time I entered the market, which was at 09:19, and then the second yellow line on the right is the time that I exited the trade at 09:28. So we were only in the market for about 9 minutes today, and we were essentially shorting Tesla. So we started up here essentially and ended up down here. When you're shorting a stock, when the price of that stock goes down, you make money. So today we made 0.38%, and which are with our current portfolio value, that was about $14. However, I'm going to go to the 15-minute time frame and readjust this a little bit. And now, obviously, at this scale, those two yellow lines basically look like one. But essentially, in this general area is where we entered the market. And you can see if we would have stayed in till it got down here, we could have made a lot more profit shorting Tesla today. Now, I'm going to go to the 5-minute chart now. The interesting thing with, I'll go back to the 1 minute. The interesting thing with areas of liquidity trading is that, and I haven't been doing area liquidity trading for very long. I would say maybe just a couple of weeks, maybe a few weeks. But let me get this chart getting nice again for what I want to talk about. But essentially, like I was saying, what you're waiting for is for price to go basically past one of these lines and then reverse directions. And again, in other videos, I'll show you how I'm choosing where to draw these lines the night before the market opens. But you can see basically my thought process for trading today is price came up to this red line. And like I said earlier, if price goes above this red line and then starts coming back down, that's possibly a good time to short. So that's what I did after it had been coming back down for a little while. I entered, and then it kept going down, and then I sold. And that's basically what the trade was today. Again, we could have made a lot more if we stayed in the market longer, but I chose out that I wanted to get out a little early today. So that's essentially what I wanted to highlight from today's trading. And like I said, in future videos, I'll talk more in depth about how to set up the chart with these lines. But for now, I'll do a quick little description of the generally what I'm doing. So like now I'm on the 4-hour time frame, and basically the red lines you want to draw in areas of highs for I generally I learned this from another online trader who's very successful, and I figured it'd be a good idea to follow what he's doing. But basically, and I'm not explaining it nearly as well as he does either. This is like what I've gathered from studying his information he has online. But anyways, basically the areas of liquidity upside, you want to mark out the highest point between a green and subsequent red candle. So basically an up and down movement. So the relative high up and down movements in the time immediately preceding the next trading day, you want to find all those high and low areas. So like you notice like these red lines are starting, and what are these red lines called? I think they're called rays. Yeah, horizontal rays. So these rays I'm drawing, if there's a high then low candle, or a green and then red candle, I put whatever the highest point of those two wicks is where I draw the ray. And then you do that, and then the opposite is true. On the bottom side, you're looking for a red and then green candle, which is a down and then up, so like a low basically. Uh, you're going to put the ray on the lowest point between those two candles. Okay, so you do that on the 4 hour time frame, and then you'll go to the 1 hour time frame and do the same thing, just on a little bit different, little bit of a different scale. So that way you're going to end up with a few green and a few red lines, of areas of liquidity, and then you can go. I usually like to start the market day off in the 15-minute time frame, and then once the market opens, we got our market open line there, that blue dashed line. When the market opens, then you have these areas, and I like to color code them again, so that way I can know like green for buy, red for sell or short. So if I can see, oh, okay, looks like price came up, touched one of these red bars, and started coming back down. Okay, I can short. Likely, it's likely that you could be correct choosing to short in that kind of a situation. And if you go back in time on these charts, you can kind of test this out and see, like, if you wanted to go back to Wednesday, you could look at the chart, what the price action was looking in the days leading up to Wednesday, and then mark out the red and green rays, and then see what actually happened with the price action on Wednesday, and you can see if it's if it if it behaved as you would have predicted using this kind of strategy. So, anyways, I'm gonna cut this video off here, but this was today's performance, and I'd like to. I wanted to document this and let you all know how it went so far this week. As I mentioned in previous videos, last week we had a bit of a red week. We ended up minus 14.4% for the week. However, this week we've been doing a lot better. We're positive 6.15% so far in the week. And that's not overall portfolio performance. That's just a simple addition of each individual day's percentage growth. So like Monday we made 4.33%, Tuesday 0.85%, Wednesday 0.59%, and Thursday today we made 0.38%. So yeah, so overall so far this week we've made, again, simple addition, 6.15%. So it's not bad for the week. We'll see what tomorrow has in store. I need to get rid of these lines and then draw the areas of liquidity lines for tomorrow. But yeah, so this is Jesse signing off, and thanks for listening.